Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. A little bit of a bandwidth issue again here, and I'm still trying to get beyond that. We have a bit of a bandwidth. There we go. We got some bandwidth, and we're actually live here in Dallas. So, kind of an interesting situation with the banking sector. Of course, the what happened, of course, is that we did have a bank failure. We actually had two. We had one, of course, on Silicon Valley Bank, and the other one on Signature Bank. These were both heavy crypto lenders. There is essentially a liquidity problem in the crypto space, so probably not a good time to have any crypto at all. Who knows what's going to happen with crypto? I certainly am not a sage on this, but it does look to me like the some of the stuff is coming home to roost, and we may be in a situation with crypto where there's just problems. So best if you can, and I don't know if I can here. My camera doesn't seem to be moving here. Let's see if I can get a better you know let's see if I can get a better thing here on that. Let's make sure that that's hit none. Okay, so hopefully we can come back here and you're hearing my voice. There we go. Great. Okay, so we have a camera issue with on the YouTube feed, but it doesn't appear like we have that on the TikTok feed. So hopefully, there we go. We came back, and we're going here. So let's switch on over on the TikTok feed to the actual live screen. This is where we show the charts and everything there. So hopefully you can see me here. Yeah, it's pretty ugly, but there we go. All right, so let's get into it. Basically, with the slides first. Um, we had this situation with the with the crypto space. This is really, I believe, and I don't think anyone's really talking about this. This, I believe, is causing the liquidity crisis in the banking sector. Is that we're finally the other shoe is hitting the floor, and that is the situation with crypto. Most of these crypto exchanges are not liquid enough. As you know, FTX went down, and now many of the banks that lent on this crypto, they're going to go down too. So I don't know if the contagion is yet controlled, but we are seeing some spillover into some of the other areas. So one of the things I wanted to show you here on my screen is the VIX. This is the volatility index, and as you can see, it has been spiking huge. There's been a huge spike on the VIX, way up, as you can see, all the way up here. So we definitely have a very, very volatile market. And I do think that there's an overcorrection. And part of the reason, when I was making these slides up today, part of the reason why I bought this morning, I closed all of my short positions. And also I sold, they went all to cash. But now, right at the end of the market, I decided, well, heck, with this VIX up the way it is, I do expect we're going to see a dead cat bounce and on some of the prominent stocks. And one of the stocks that I do believe we're going to see that dead cat bounce on is Charles Schwab. I did make a move into Charles Schwab this afternoon after the hours. Why? Because I do think that this is going to bounce in the after hours, and it already is. Basically, I got in here at about 52.50. We're already up to 53.40. I definitely think this is going to move up, maybe as high as 60. Who knows? I'll be closing this position tomorrow, but this is just a quick way. I do think what's going to happen is on the open tomorrow, we're going to see Charles Schwab move higher, because I do think there was an overreaction. Now, here's the thing about Charles Schwab. This is one of the brokers that I use as well. Charles Schwab is the largest broker in the world, and it does have over $1 trillion in deposits. So it's an amazing amount, and they were being hammered today on the open. They were just absolutely being hammered on the open. Okay, I have a question from. This is a great question from TikTok, and want to kind of talk a little bit about what in the heck is a dead cat bounce. This is this is from Julie. Thank you very much, Julie, for taking a look at my little TikTok channel. By the way, if you want to see some of the what I'm doing here, just jump on over to my YouTube channel. It's YouTube slash Dallas Trading Floor, all one word, Dallas Trading Floor, and then you'll be able to get the show. We're live right now, so you should be able to see it. The show that I'm recording right now. What a dead cat bounce is that it is essentially, and I'm going to show you the chart of Charles Schwab here. And the reason I'm going to show you this is because I think this is a classic potential dead cat bounce. Now, what a dead cat bounce means is when something comes down extremely hard, and that's exactly what happened with um, with with Charles Schwab today. What happens is it typically will bounce, meaning that it will it will come all the way down and then reverse higher. So in the after hours, I bought some shares, and I didn't buy all that many. Just about just a little small position, about 100 shares, and it's going to bounce up. And you see, it's already doing that in the after hours. We're up to 53.46 now. Where I bought these shares was at 52. 75, well, between 52.50 and 52.75, and you see it's already coming up. So in the open tomorrow, Charles Schwab will probably move up, maybe as high as 60, I don't know, but basically you got to kind of get in there and get out of there quickly. What'll happen is that it corrected too far to the downside, and now it's going to bounce to the upside. And so basically what I'm thinking is going to happen tomorrow, it came down here, but what's going to happen is that tomorrow it's likely to move and correct back up. Now, it won't go all the way back up to the 200-day line. It'll probably come up, maybe halfway between where it ended up in the down range, which was a 47, maybe all the way up to 60, 65. But it's a way that we can make some quick money here. So that's what a dead cat bounce is. It kind of works that way. It kind of works that way in the it does kind of work that way. Now we also have a question here for Goldman Sachs. That's of course GS is the symbol on that one. Let's take a quick look at the chart on that one to see if there's any opportunities here. Well, this one, of course, is one of the big banks. Now, there are four banks that are what they call too big to fail banks. And basically, they're JP Morgan Chase, Wells Fargo, Bank of America, and Citicorp. Now, you might consider Goldman Sachs as number 5 on that list. Goldman Sachs has been getting out of the consumer business as of late, but they do have a consumer arm. So Goldman Sachs is definitely a semi money center bank, and I think they are too big to fail. Now, why Goldman Sachs is so critical to the market, to the financial markets, is that Goldman Sachs is the primary vendor of government debt. There's only 13 of these banks, and that's why it's so significant. So here's what happened with Goldman. You see it's up after hours as well. That's very interesting to see that. You see it came down. This is what I'm talking about, the dead cat bounce. I think that Goldman Sachs is likely to bounce less than Charles Schwab. Charles Schwab is likely, I believe, to bounce harder. Why? Because it has probably more assets. I mean, because of their holdings. But this too, I do believe we're going to see a dead cat bounce. Now the question is, will it come up to the 200-day line? I doubt it, but I think it will come up basically. And let's look at the 60-minute chart here to see kind of where I think that might come up. I think that right now it's selling right below that 320. I think it could bounce as high as I think it could bounce as high as about 345, right about there. So I do think that we're going to see probably a bounce on this, but I'm not as confident with Goldman Sachs as I am with as confident as I am with Charles Schwab. We'll see what happens with Charles Schwab. Charles Schwab has already started to correct in the after hours. So it may be too late by tomorrow morning. I hope not, but at least it's kind of a good thing to take a look at. Roman is asking here. Thank you, Roman, for taking a look at my show. Hot CPI tomorrow. Yeah, I think you're right. I think the CPI is going to be out of control tomorrow because here's the problem. Here's the problem that we have in this market. The Fed is going to continue to raise interest rates. Why? Because it has to attract more capital. Now, what they're not telling you, unfortunately, is that we have a very strange situation. In the consumer market, we have an inflation problem, okay? Things we normally bought are costing more. But in the other area, we have a deflation problem. Now, nobody is talking about deflation. Why? Because deflation is very scary. There is a shortage of dollars. There's a shortage of dollar liquidity in the market right now. And that's the reason why they are raising the interest rates, which is attracting capital back into the bond market. Okay. The reason Silicon Valley Bank went down was because they held all of these low interest bonds, these long bonds. And as the interest rates go up, as you know from your finance classes, as the interest rates go up, the value of the bonds go down. And there's a rule, an accounting rule called mark to market, which means that we have to mark our value to market. So in the long run, if we held these to maturity, if these bonds to maturity, it wouldn't be a problem. We wouldn't have to use mark to market. We could use what they call book value in accounting. But with generally accepted accounting principles, you have to use what they call mark to market, which means that I have to record on my balance sheet the value at the market of the assets that I'm holding. And unfortunately, because of the extremely quick rise in interest rates, the value of the bonds held by many of these banks has decreased rapidly. So they have a liquidity problem, and that's the reason why Silicon Valley Bank was liquidated today. Now, also Signature Bank is liquidated as well. I expect we're going to see some more regional banks be very weak. First Republic is on the ropes right now. I want to show you First Republic because I think that there may be an opportunity with First Republic possibly to possibly to make some money on that one. So let me just jump over here. I don't remember what the First Republic symbol is, but I'm going to find out. RST. Now, it's very likely that First Republic will be merged into another bank. First Republic symbol. So let's take a look at First Republic. It's FRC. I never get this one right. So let's jump on over to FRC and take a look here. And this is First Republic Bank. I know this is off the question here, but very, very weak. There's a dead cat bounce on this one in after hours, as you can see. We went all the way down. We're up 19% in the after hours. Why? Because this phenomenon that I was talking about here called the dead cat bounce, where it comes down and then it overshoots and then it moves up. This is why I bought Charles Schwab today after hours, because I'm expecting it to dead cat bounce up. This one will too. This is First Republic Bank. I expect on open that we're going to see it probably move from about 36. Let's take a look at the 60-minute chart. We're probably going to see it move probably from about $40 here on up to maybe as high as 60. But that'll be a very short occurrence. I believe the dead cat bounce on First Republic Bank probably will only last a few hours. So that might be another idea to make a little bit of money in the in the meantime. We have a question from TikTok. Thanks again for looking at me on TikTok about Coinbase, and of course, this Coinbase, COIN, is one of the largest of the crypto exchanges that's still up and operating. I do expect this one potentially to sell off. I really do. I think there's a lot of weakness here. Now, it doesn't show it on the chart. We did have a dead cat bounce on this one as well, up to 59.91. But this one, I'm looking potentially to short. I'm looking to short Coinbase, but not right now. I want Coinbase to rally to that. I want Coinbase to rally to the 200-day moving average. That's probably where I will be shorting Coinbase tomorrow. Let's take a look and see where that. Let's see where that 21-day. Let's see where that 200-day line is. This is on the technicals here. That's at 60.33. That's kind of where I plan to short. If it moves up to 61, I'm probably a short on Coinbase tomorrow. As a matter of fact, I want to put that on there. So short coin at, I think about 61 is going to be a good number to go short on this one. Why? Because I do think that if it exceeds this level, I think it's likely to go lower. Now there was some buying that came in here. I do think that these are shorts that are covering, but I do think if we go up a little bit higher here, we'll see how it comes in the morning. I want to look at the 60-minute chart to see. Yeah, see, it was all the way up here at 70, and that was not that long ago. That was basically just 5 days ago. We were all the way up here at 70. So I do expect this dead cat bounce to come up maybe to as high as 65 or so. That's probably where I'll be shorting. It'll be right there because I didn't make the bounce on this one, but I do think that we're going to see a covering and then it's going to move up and then wham, I think it's going to come down. So that's my opinion on Coinbase. It is a good candidate potentially to short. It's right, but don't short it now because we want to wait until it moves up to maybe about 61 to 65 on that before we do that. All right. Thank you, Roman. Again, VIX got over 300 today for a bit. Yeah, absolutely it did. Yeah, it was pretty amazing. All right. Charles, hey, thanks, by the way. Charles, thanks, by the way, for taking a look at the course, the options course from Gavin McMaster. It's an excellent course. I think you'll really enjoy it. By the way, everybody out there, if you're interested in taking a look at the course, the options course by my friend Gavin McMaster, I don't think you can do better. If you're on TikTok, just click that bio link, and it's the first one in there, and so it's super easy. Or if you are looking. If you're on YouTube, just go to www.Dallas Trading Floor, and then you'll see it. I'll show you. You'll see where you can get on that link. Let me just give you to get that course. It's a really a good course. Here's another way that you can access the course for the options trading course. Basically super easy. Just go to this address, https://stan.store/Dallas Trading Floor, and that'll bring you to the that'll bring you right to the right place for that course. So it's a great course, by the way. All right, let's take some more questions here. All right. Does technical analysis actually work? Absolutely, it does. Technical analysis is the reason why people like William O'Neill have, technical. If there's the most profitable hedge fund in the world is run by a guy named James Simmons. It's called Renaissance Technologies. I know it sounds like a weird one. It's the most successful hedge fund of all time. Look him up, James Simmons, and he is a technical analyst, one of the best in the world. And he also is a mathematician as well. So absolutely, technical analysis does work. Believe me, it does. All right. What is the dead cat match this week? Okay, Chuck. Let's see if we have some more here. Oh, thanks. There we go. Thank you. Any ideas about CRM? I'm holding 200 plus. Let's look at CRM now. For everyone out there, of course, CRM is Salesforce. It's a great company, and it did have a nice move. It is one of the only tech companies, software companies that's in the Dow. So very interesting company. So let's take a look at the chart here for Salesforce right now. And I'll put that back up in a second. But this is the four. This is the core. This is the chart for Salesforce. We did have this. We did have this tremendous gap up on earnings. You notice they had great earnings there. There was the gap up. This happens many times when earnings are very good. We get these things called gap ups. This is definitely the case here, and it's now pulling back. Now it does look like it's gotten some support right here at what they call the 21-day moving average. Let's take a look and see what that level is on the 21-day for CRM. The 21-day line currently is at 172.85. Here's what I would do. Here's what I would recommend doing on this one. By the way, happiness matters. I like that name. Happiness matters. This is a TikTok viewer. Happiness matters. Here's what you need to do. You need to put a stop loss in at the 21-day line. That's 172.85. So that's where you want to be in terms of being in a stop loss for CRM. So what I'm going to do here is stop loss for CRM, and I'm going to equal at the 21-day line. For me, is going to equal 172. 172.85. So that's going to be your stop loss point for CRM. I'm just going to put that up on the screen for everyone so that you can see it. It says stop question mark. That's not right. But anyways, 172.68. That's kind of where you want to be. I do think that it does look like CRM is getting some support at the 21-day line. So that's kind of where I think that you want to be. Bitcoin, interesting. This is from Mr. Jeet. Here's the thing. I do think that, I know I have some friends that deal in Bitcoin. As you probably know, I've really never done anything on it, but there is an opportunity, I think. And there is a Bitcoin ETF called BITO. BITO. Let's look at it really quick. I think it's up today. Yeah, it's the Bitcoin Strategy ETF. This is the only way I would play Bitcoin, and the reason I'm really leery about Bitcoin, of course, is because of these things like, it's sort of the Wild West. There's really no regulation of the Bitcoin market, and so we have a situation where this might be a way that you can play Bitcoin. I definitely think we're going to get a dead cat bounce on Bitcoin. And as you can see, we already did. It came down to this bit. Oh, this is the capital appreciation on Bitcoin. It's called BITO. It came down to the 200-day line, and to the 50-day line. It did bounce. I don't know if this is going to be long-lived. I think that this is going to bounce and then possibly move lower. But right now, we did get the dead cat bounce. This is a dead cat. This is a classic dead cat bounce. Came down here. It moved up, and now it's sort of trying to get a little bit of, it seems like it's trying to move past 15. So I'd be a little bit careful here. I do think that Bitcoin is likely to fall, but not initially. I think this week we may get it. We may get a move up. But I'd be really careful with Bitcoin right now. The biggest problem with Bitcoin is you have these exchanges that aren't capitalized. They literally do not have dollars, so they're not really exchanges. As long as people are putting money in, everything is hunky-dory. But when they pull money out, that's where the liquidity problem happens. That's what happened with Signature Bank. Signature Bank in New York was backing a lot of these exchanges, and then of course it went under today. So not a great thing on Bitcoin. So I think you got to be super duper careful. I don't invest in Bitcoin directly. I just don't because of its because of its volatility, the fact that it isn't really backed. It's not like the stocks market where there's actually backing behind it. So not a great thing. JP Morgan, 400 shares at 101. And my son said, hey, great. Thank you, man. I'm just reading this here. JP Morgan, 400 shares in my custodial account and 200 in my own account. Okay, to hold. Absolutely, I would hold this. I think JP Morgan, here's the thing. It depends on what your average cost is on JP Morgan. But I do think, and I know that, nobody really wants to say this, but I think that you're going to see, I think you're going to see it stabilize extremely quickly with JP Morgan. It came down, it didn't even touch the 200-day line. I definitely think we're going to see a nice movement on this. It's already up after hours. This is what they call the dead cat bounce. And I think that that's very good. See, today we had the sell-off here, but it's already an after hour stabilized. So I think you're okay there. Here's what I would do on this one. And I think we got to be really, really careful about this one. But what I would do on this one, I think you need to set a stop loss on both of these accounts. Why? Because we can't predict the future. So what I would do looking at this is I would put my stop loss on both of these accounts at the 200-day line, 125.30. That's where I'd put my stop loss for that's where I put my stop loss for JP Morgan. But I think you're going to be rewarded for buying JP Morgan. I think you're going to be rewarded. I do think we're going to get a dead cat bounce on JP Morgan tomorrow. Why? Because JP Morgan holds more assets than any other bank in the world, and it is the one that if there's any bank they will bail out, that's the one. Thoughts on SoFi? This is probably going to be my last one here. SoFi, I think, is really a done. I think it's done. And I hope that you don't have a lot of money in this one, because this is one of the reasons why you need to. Anytime something goes down 7%, you need to sell immediately. This is the stop loss rule that I've employed for many years quite successfully, and this is so you can protect your capital. It's a very cheap stock. Currently, it's trading below the 200-day line. I just think you got to sell this one. I just don't think that SoFi Technologies is very good. I think that they're going to have a problem. I just think they're going to have a problem. So I would be out of these. I would be out of SoFi. Not really. I just think you need to be out of SoFi. I just don't think it's looking good. Somebody is investing in Carvana. This is another one I think that's going to go to zero. But let's take a look at it. CVNA. I think this one also is likely to go out of business. This is Carvana. And we do have, it is up after hours to 750 from 745. The problem with Carvana, the problem with the automobile sector is interest rates now are too high. Most people cannot afford cars. And so I just don't think Carvana is going to survive this. All of the car companies, now I shorted AutoNation too soon, but I think that we're going to see a lot more damage in this area, in the automobile dealership area. I just don't think this is where you want to be in the market. And I just, I'm sorry to be so negative on this one. This is not a buy. This could easily go out of business. They have a liquidity problem. So I see that there is a problem probably with Carvana. So not the best and most cheery news. Mostly in this market, we're in a downward trend. We're in a we're in a market that is basically, in correction. And we've got to be absolutely clear about that. We're in a market that's in correction. Right now, we don't really want to make new share purchases. Now here I'm saying that, and that I did buy Schwab. Well, I'm going to hold it very, very short time. I'm going to let it bounce, and then I'm going to push my stop loss up, and then when it pulls back, I'll be out of this one. But this is not a time to go long. This is a time to be in cash or short. And I'm also looking possibly to short Coinbase at about 65. That's where I think it's gonna take a dumper. And Coinbase could also go out of business very, very easily. It has liquidity problems, so I think that if I can borrow some shares, I'll be shorting Coinbase probably tomorrow. So thank you very, very much. And which data are you looking at on each ticker? I'm actually using MarketSmith, which is a great program um, from Investor Business Daily. It's a really, really good, really, really good program. All right, everybody. Well, let's do Tesla first. That'll be the last one for today. Tesla, TSLA. Now, here's the problem with Tesla. Part of the reason Tesla, and I did make a lot of money on Tesla about 2 years ago. I haven't really been successful with it recently, but here's the thing about Tesla. The demand for cars is going down everywhere. This is one of the reasons why Tesla cut their prices. Okay, that's why they cut their prices. Demand is falling off a cliff for cars. People just literally cannot afford the $1,000 a month, the average new car payment. So with the interest rates going up, Tesla is cutting prices. I'm not that excited about it. I mean, I like the company. I like Elon Musk, but I don't think right now. I think we're getting some support at the 50-day line, but obviously the time to have bought it was when it was at about 107. Now, I didn't buy it there. I was too afraid that it was going to continue to move lower. It did move up very, very quickly from 109 to 217. I could have doubled my money there, but I was a little bit too scared. I still think right now it's in a downward trend. So I would not buy I would not buy Tesla at these levels. I would stay away at least until it moves below, possibly get some support maybe at the 200-day, below the 50-day line. So I'm just not a buyer of tech of Tesla right now. It has to do with cars, absolutely. I think I got into cars with the price guarantee. Yeah, absolutely. Well, see, that's the problem. That's the problem. This is the problem with the solar energy too. This is the problem with the solar energy industry, that I think that a lot of people they don't realize. And I mean, it's a hard realization because, it goes against everything that you're being told. The problem is electric cars and solar energy depend almost exclusively for profitability on government subsidies. That is not true with oil. Now, it's true, the rhetoric says, well, we got to stop giving the oil company subsidies. Well, they don't get subsidies. They have depletion allowances that have been around for 100 years. But the problem with the solar energy industry is that it's not profitable. It's just not profitable without government subsidies. Now, with government subsidies, it's profitable. And Elon Musk has made a fortune. But remember, it's $7,500 per car. That is the credit. So without those credits, the electric car business, at least for right now, is not profitable. So that's why you got to be careful with the automobile industry. You really have to be. And you also have to be careful with the banks that tend to finance the automobile industry. Ally Bank is one of them. That is GM's bank. So be very careful there. All right, let's see. One last one. Thank you for everybody for chopping in. All right, this is PayPal. Okay, let's look at PayPal. Thank you for watching, by the way. Oh, Bank of America and okay. Let's look at PayPal. That's a key one. PYPL, and of course this was the company that Elon Musk sold to eBay, and this was the start really of the ability of the capital that would allow them to build SpaceX and Tesla. So it definitely looks like here's the problem with PayPal. We're below the 200-day line. We're below that 21-day line. We've pulled back. The question is, are we going to get a dead cat bounce? It's showing a little bit of a dead cat bounce there, but the overall trend for PayPal is downward. I wouldn't buy it because we don't know where the bottom is. Okay, if this had gapped down, I would be much more confident that we had found the bottom. I'm not confident that we've found the bottom on PayPal. It could easily move lower. So just kind of the deal. Yeah. And thank you very much for this comment, by the way, on TikTok. TikTok number one. fan. Unfortunately, it is true with electric cars. They just aren't feasible at their price point. Now, if they're over $100,000, they're very feasible. The problem is the price is not low enough yet, and so it's going to be trouble. It's going to be trouble. This is one of the reasons why if and I do think eventually we're going to have to see we're just going to have to see the subsidies go away. Why? Because we're fighting a war basically in Ukraine, which we shouldn't be. That's costing us billions and trillions of dollars. So it's gonna either be subsidies on cars or Medicaid and Social Security. So I think that Medicaid and Social Security are going to win, and I think that by the way, Biden just reluctantly started to allow drilling in Alaska again in new production for oil. So I don't think we've seen the last of oil. I think oil is here to stay, at least in my lifetime. So, all right. Well, thank you, Vin, everybody, very, very much for taking a look. I'll be back tomorrow at 5. If you're not already a member of Dallas Trading Floor, it's super duper easy. All you have to do is hit the like button. Now that's the small like button, but I want you to hit the big like button. So smash that like button. And by smashing the like button, of course, that really helps us get out there to more people. And I'll be back tomorrow again at 5. Thank you, everybody. Happy trading.